Welcome to Investors Insights. Our topic today is consumer down, but not out. Today, we're going to be discussing those topics related to the consumer spending and sentiment. We're going to be talking about job openings. We're going to be talking about federal taxes. We're going to be talking about corporate earnings that could impact your portfolio. And we're going to be talking about market volatility and what you need to be watching. With that, I've had an incredible morning meeting with my colleagues, Bobby Norman, Trey Booth, and Adam Van Zandt. And I love the debate and discussion and the research that's been done by these three individuals. And we want to share it with you, not only on this vlog, but also in our social media, LinkedIn, Twitter, Facebook. As the week progresses, these discussions will continue on, and you need to follow us, as well as we appreciate those of you who are forwarding it to colleagues and neighbors and friends. With that, Bobby, I'm going to you first because I got very excited what you said about consumer sentiment this morning, as well as job openings. And I'd really like for you to share that with our viewers.
Yeah, so we will be watching the retail sales number closely this week as the U.S. consumer is showing concerning weakness. And so the weakness in the consumer matters because consumer spending is 69% of our economy, something we talk about all the time. And consumer confidence expectations is a leading economic indicator. And last week, we saw a notable dip in the U.S. consumer sentiment in May. So as you can see in this first chart, the measure of consumer sentiment registered a decline to 59.1, which is a 10-year low, and it's 28% fall from a year ago, which is an alarming continued drop in sentiment. So again, we're still seeing inflation is still a big problem for the consumer. And this concern leaves a narrow path for the Fed to raise rates without too much economic pain, because losing the U.S. consumer would make it very hard to avoid a downturn in the overall economy, and it'll make it much more difficult for the Fed to have a soft landing. So, but it's not all bad news. As this next chart shows, job openings to unemployed workers ratio is at a record high. That's great. There are on average 2 job openings for every 1 person looking. So the labor market is strong. And so we'll be analyzing the consumer reports like retail sales this week very closely to keep an eye out on the consumer.
Well, and that's the point. We have been talking about that. We think inflation, we could start seeing things slow up. Your consumer sentiment is a good indicator of that. So if people are watching our blogs, the previous ones, we've talked about this as a possibility, and we're starting to see that in our data. Now, Trey, you came at us with multiple topics. Really appreciate all the effort. The first topic, talk about corporate earnings, because as we transition from what Bobby's talking about, this is positive that corporate America is still doing well. And then the other thing is talk about federal taxes. Stay with us, folks, because on federal taxes, during the campaigning that's going on in this country right now, just know your government's doing okay. So go ahead, Trey.
Yeah, thanks, Greg. To Bobby's point, the consumer sentiment-wise is definitely falling and appears to be very negative. However, if you look at corporate America and revenues by corporate America, the consumer is still spending. Revenues in the first quarter, as you can see in this chart, were up nearly 14%. Add to that, the earnings were up 11%. So corporate America is still very strong. That's likely why you see such a large amount of job openings. Corporate America is still hiring. We still see unemployment extremely low. And so while the consumer sentiment it does appear to be negative, it's not hitting Wall Street as of yet, or corporate or down to the balance sheet of the companies, which when you're an investor seeing earnings growth, that is the core base of a growing market, which is what we watch very closely. So if market prices are down, earnings are up, that makes the market much, much cheaper. And then on the other side of corporate earnings, though, is the companies are making money, they've got to be paying taxes. We all know we all pay taxes.
Yes.
The tax man cometh in April, and April was a record year, a record month for federal government.
Whoa, Trey, can you say that one more time?
Yeah,
April was?
It was a record year. The federal government brought in $864 billion in the month of April. That beats the previous record, which was $560 billion. So we're seeing that record deficit that we saw during COVID coming crashing down. The deficit is actually shrinking. The percentage of GDP that was brought in corporate and federal tax receipts nearing a record high north of 19%. So the federal government is doing very well. The balance sheet of the federal government, balance sheet of corporate America, very strong. Why does the federal government's balance sheet help the investor? Well, right now, the Federal Reserve is reducing their bond purchases. So it's pure supply and demand. If the Fed is no longer buying treasuries, who's going to buy it? Well, it's not that big of an issue if the government isn't issuing treasuries. So with a record tax receipts, that reduces the amount of treasuries and debt that the government has to issue. And that is a benefit to the markets. And so this may be a great time for the Fed to step away from providing record stimulus to support what was record deficits. So the shrinking of the federal deficit should be very deflationary and something we've been really watching very closely and really needed to happen. So really good news out of the federal government.
Yeah, across the board, corporate earnings are good. Federal, taxes up, job openings there. We hear a lot of sentiment ourselves talking to our clients. There's a lot of negative out there in the news and the media. We don't make the data up that we're bringing you. These facts are behind the scenes, and we see a lot of positives. And with that, we want to be here to communicate with you. And something I've gotten a lot of compliments on, Adam, you've helped people doing some hand-holding from the standpoint of just understanding the volatility and the market movements from a technical analysis standpoint. So talk about that. So once again, this week, as we have this positive news we're talking about, they can kind of see some of these things in action based on the S&P 500 and other indices.
Yeah, speaking of the S&P 500, we saw a lot of turbulence in the markets last week, ultimately leading to a Friday trading day in which all 11 sectors were up over 1%. So the S&P closed on Friday at 4,023, giving us a new resistance level of 4,060 and a new support level of 3,990. Also, in the last few vlogs, we talked about the intermediate to longer term outlook, reaching out to the end of the year. So with that, I want to give the 50-day moving day average of the S&P 500 that's currently sitting at 4,331. It's an important number to focus on as we get later on in the year that could potentially be our new resistance level that we're looking at, in the longer term.
Yeah, it's an important number to know. Well, folks, hopefully we've brought you some insight and positive thoughts in relation to the volatility here in the market. We still think there's a lot of great things going on. We're going to keep you updated. If you have questions, don't hesitate to call, email us. We want to discuss them. We're going to continue to keep you updated. We've also been sending out emails of data for your information as well. So we fully believe that knowledge is very powerful, and that once you have the knowledge, you can confront the fear, and that gives you confidence to move forward. We'll keep you updated. Have a great week. Go out, plan a trip, go to a restaurant, leisure entertainment. We've done all the home improvements we need to do, and let's see if we can drive inflation down and enjoy the summer. Talk to you later. Thanks.